Hey guys, what's up? Welcome to another episode with me, Shashank Udupa, and today is a very special episode for me. The reason why this is a special episode for me is because I had run an experiment 1 year ago. I don't know how many of y'all were there 1 year ago. I don't know how many of y'all participated in this experiment 1 year ago. But basically, I ran an experiment 1 year ago. So 1 year ago, around Feb 19th, I was very vocal about fundamental analysis and long-term investing. And I said, you know what? I am going to do long-term investing along with you for a period of 1 year. Right? So I'm going to buy a stock, keep it with you, which is going to be public, and I'm going to hold it for 1 year just to see what happens. And there were very good times and there were very bad times as well for this entire portfolio. And I don't know how many of y'all have invested in this portfolio, how many of y'all have been tracking this portfolio, but it has been a very bumpy journey. Number one, why has it been a bumpy journey? Because it has gone up, gone down quite significantly. It had reached a peak of 65% returns and now it's gone down again. But this teaches me and you and everyone else that how fundamental analysis and long-term investing can actually impact. And this is a live experiment, which is a 1 year experiment that I've done with you guys through YouTube. Okay, so we're going to look at that, but first let's look at some important things. What's happening with the world right now? Okay, and what is happening, and all of you guys have this question as well, so I'm live anyway, might as well talk about it. I know most of you guys have heard about this, the Ukraine and Russia crisis that is happening now. Russia has declared war on Ukraine, and that the markets have obviously reacted in a very bad way, which is tend to react because whenever a war happens, it is not good for any economy. Leave it just that economy, it's any economy. Now I saw someone in the questions asking, also saying, how does the war of Russia and Ukraine affect India? It should not affect Indian markets, right? तो क्यों affect हो रहा है? Please understand this, that the world markets are all connected by a single thread. Okay, the entire world market is connected by a single thread, right? If Russia attacks Ukraine, Russian economy or the Russian price or the Russian rupee or whatever the ruble is there, they depreciate in value. US appreciates in value. If dollar goes up, India gets affected as well. Russia is also an exporter of a lot of raw materials. If there is a war, then the raw material demand supply gap will start happening, right? Russia exports a lot of oil, a lot of other things come from Russia. So if that goes into war, then their exports start getting affected. Now, apart from exports, there is something else that is happening as well, which is whenever there is a war of oil or whenever there is a fight, right? So if that goes into war, then their exports start. Can you guys hear me clearly, guys? Now, apart from exports, there is something else that is happening as well. So apart from oil or apart from exports, another problem that you might have seen yesterday, that US came and said that we will impose sanctions. We will impose sanctions. We will not trade with you. India, Japan will not trade with you. US will not trade with you. A lot of people will not trade with you. And when that happens, the trade gets affected between two countries. When trade gets affected, again, the equilibrium that was created will go away. Arbitrage will happen, right? Is that an okay? Now it should be fine. Yeah, arbitrage will happen again, and then once the arbitrage is gone, everything will come back to equilibrium. So that is why war is not good for anyone, not good for anything. Now, the fight between Russia and Ukraine, I feel bad because the entire media is throwing Russia under the bus, saying that Russia is bad in this. You know, tali ek hat se nahi bajta. I always look at it from that perspective. I don't believe everything that the media tells me. I look at the facts, I read the data, and if you understand what's actually going on in Ukraine, right? Ukraine, which is like a brother country, or they call Russia their bigger brother. It's a separate independent nation, but there's a lot of pressure for Ukraine to join NATO and to join the West allies. Russia is not going to obviously allow that. So there is a small fight happening for Ukraine, and this is I don't know how long this will go on for, but it's not a massive war, and a lot of people are saying this will start the World War III. Guys, for World War III to start, Russia will have to attack USA, not Ukraine, right? So it will not I don't see a scenario. It might happen, but I don't see a very weird scenario where Russia attacks Ukraine over here and US will come and start attacking Russia. I don't see that happening, because if US starts attacking Russia, then China will come and start attacking US. Then it leads to a big world war. But always understand both sides of the scenario. What's happening in Ukraine, what's happening because of US, what's happening because of NATO and EU, and what's happening because of Russia. Right? Because a lot of people think that, you know, it is a one-sided argument that Russia is going and attacking, but there is a reason why till date he's not attacked. Why is he attacking right now? मतलब कुछ तो हो रहा है, right? So please, you guys also go read the facts. It's like saying tomorrow that someone is attacking India and we are retaliating back, suddenly we become bad. No, we're not bad, right? Because there is something happening on the side, so we're retaliating for something, right? ऐसे ही सुबह उठ के चलो आज एक war करते हैं, चलो एक attack करते हैं, कौन सा nation को attack करते हैं. Nobody thinks like that. It is a big thing to attack a country, and there are reasons for attacking a country. So please understand that first. Okay, so yes, the what is going to happen is basically now the world economy is going to be little off. Why? Because of this Ukraine crisis. I don't know how long this will last. I don't think it's going to last for too long. I think Russia in the next few days will just call off everything and Ukraine will come to a settlement, because I know for a fact I don't think US is going to enter in this. US is just going to be like, hum hai, aap jhagda karo, we will stand behind you, right? But I don't think it is just going to end up in a peace argument, or it will just end up in a normal state and then the markets will rally again. The scenario of it going to a world war would be highly unlikely, right? The reason why I'm saying the reason it will not go into a world war and it's highly unlikely is because if US attacks Russia, which will not happen, but just think about how the world economy is placed right now, right? If US attacks Russia, US doesn't like Russia for sure. China also doesn't like USA. So USA will obviously have a problem because China and Russia would want to come. Yeah, Russia last year only they did a big problem with North Korea. So North Korea will like, अगर आप attack करो US को, हम लोग भी आ जाएंगे. And then UN got involved as well. UN का obviously no one listens to UN right now. It is just a body which keeps saying ऐसा मत करो वैसा मत करो. Nobody listens to UN too much at this point. So yeah, I don't, if it's like an East versus West battle, feels like Marvels versus DC, but again, I'm not going to go too deep into it because I don't think a World War III is going to happen. I hope not, right? I can't predict the future, but I think this will die down in the next few days. But if it dies down, the market will start rallying back up again. Cool? Awesome. So let's leave that. वो सब तो चलता रहेगा boss. Market going up, market going down, keep happening, right? We know this, we have seen this. But how many of y'all, I want to ask a question here. How many of y'all have been invested in the small case for the last 1 year, right? I did this video in Feb, third week of last year. Exactly that time I'm coming back and doing another video. So how many of y'all have invested in this small case last year? I made 3 small cases. I made 3 portfolios. One is the 30,000 small case, one is the 5,000 small case, and one is the 1,000 rupees small case, right? So who can, I want to see in the chat below how many of y'all have actually bought it at that point and how many of y'all have actually held it for a period of 1 year. If someone has held it for a period of 1 year, just put me in the comments below, because this is very interesting to look at. By the way, this was a social experiment I ran 1 year ago where I said I'm going to do long-term investing and I'm going to stay invested for a period of 1 year. Sarthak only invested for 3 months. I don't know why, Sarthak, you exited. Maybe because in 3 months it was going down, and it did go down a lot, right? But it also eventually goes up. So let me show you what happened, right? Now, first I want to show you what you guys have been through. Okay, 1 year ka Nifty chart I'm going to show you, right? This is a Nifty chart for the last 1 year. This line that you see right here is when I invested in that small case, right? This is Feb 19th is when I took positions in that small case. I did a 3 small case, 30,000, 5,000 and 1,000, right? So I did that right in this point. Now, immediately after we invested in this small case, the market tested our patience, right? And I tell you this always, right? In the market, patience will pay you multifold returns. You need to have patience. Yeah, coronavirus, some other problem, this problem, that problem, crude oil going up, inflation going up, ये होता रहेगा, होता रहा है, होता भी रहेगा आगे future में भी, right? Market keeps going up and down, but eventually it goes up, number one. So immediately when we invested in Feb 19th, you saw this massive rally that went downward slope. It went down till here. So if you had invested in this with me together on this date, we would have seen a massive downfall of 5% in our portfolio. Most of the people would have got scared. Most of the people here only would have got scared, because this is a period of Feb to April. Feb, March, April, 2 months, Shashank, you gave us -5 returns, which is quite pathetic, right? The market went down quite a bit. This is Nifty, by the way. I'm showing you Nifty. I'm not showing you mine. And after that, if you see how Nifty slowly started going up, somewhere around this point, right? Somewhere in the month of May is when Nifty broke even from our initial entry point and then kept going up, Now we had the rally. Look at the volumes here, right? You had the massive bull rally going up. After that, I think Shani Bari ho gaya over here, right? After the bull rally kept going up, I think किसी का तो नजर लग गया कि India was going up too much, right? And then we see that the massive downfall started. Now the downfall was very boring, right? Because this is when you see October onwards, we saw the massive crash happening over here. We saw one big fall. And remember, a lot of people, I remember, still invested in this stock. So you guys are not even recovered if you have invested here. It fell down, kept going down. Then everything became fine. Then it went back up again. It went back up, and then Jan May the US Fed rates again changed the decision, hiked the interest rate, again went down. By the way, remember, I don't know how many of you will watch this live stream and I keep doing it, but I had told you guys this before only, that the liquidity is going to be crunched out of the market. US Fed is going to hike the rates. India also is supposed to go hike the rates because they have to control inflation. Slowly liquidity from the market will start going away from the market. The bull run will slowly reduce. It will become a very normal, boring market, and slowly that will happen, right? So again, it went up, went down, and now we're trading in a channel. So if you had to see what is Nifty's return in the last 1 year, right? If I do Nifty's 1 year returns, right? Nifty's 1 year return is approximately 10.81% as of today. Obviously, when it had gone up to a peak of 20-25%. But today it was 1 year May, it has gone up by 10%. Now, most fund managers try benchmark themselves or benchmark their returns or their investment portfolio with the Nifty benchmark index. So they say that I should at least beat the Nifty index, right? So mutual fund companies also see if they beat the Nifty benchmark index. And if you beat the Nifty benchmark index, then you have done good investing for the year. That is what it is. And bull run may, another disclaimer, right? In the bull run, most of the people end up making more money than the Nifty if they're smart, right? Because the bull run is going on. The true game is bear run may. In the bear run, who makes money? That is the game, right? That is the true investor. But we will continue to look at fundamentally strong stocks and invest in those stocks. Now let's look at how our investments have done, the small cases that we made, right? So first I'm going to look at the 30,000 small case. Now the 30,000 small case, as I mentioned, I have invested on Feb 19th, 2021. We had invested 30,000 rupees at that point, right? Don't worry about the rupees because we should look at only percentages, and percentage returns make sense. So has the 30,000 small case beat the Nifty benchmark index? Yes, it has. It has gone up. We have got a total returns as of today, 1 year holding of 25%. This had gone up to a point of 60% returns, I remember, right? It had gone up to 60% returns, but we did not exit it. Why? Because we said we will hold it for 1 year period and see what happens. We are not going to sell it for 1 year, right? This was an experiment we did together. And I didn't even actively manage this portfolio. It was a passive managed portfolio with fundamentally good stocks to compound by itself. So 25% returns has come, which is obviously beat the benchmark index by around 15% extra. Realized returns is minus 358. This is something that we kept doing adjustments. Dividends, we have got 174 out of this. Now, another very interesting question. If I remove this, if I exit this small case right now, I don't pay any taxes. Right? If I exit the small case right now, I don't pay any taxes. Why? Because this comes under long-term capital gains. I have invested for more than 1 year. So if I remove this, this comes under LTCG scheme, and long-term capital gains suggests that up to 1 lakh, you don't have to pay any taxes. So this would come to me completely tax-free, right? Now, if you look at all the stocks, it's 52%, 48% returns, 45. These are all fundamentally good stocks that we invested at a very small period. 1 year ago, we invested at a low rate, right? We invested Happiest Minds at 648 rupees. Now, after so much up and down, it's still not going to go down to 640. It's not gone down to 648 rupees. If it goes down, great, accumulate more, right? So this is the entire portfolio of 30,000. Let's look at the 5,000 small case. Now, 5,000 small case, the current returns is 19.10%, right? 19.10% is the, again, returns. Has it beat the benchmark index? Yes, it has beat the benchmark index also. So not an issue for this as well. Again, if I remove this, tax-free returns for me, realized returns minus 350, dividends 21, and 840 rupees is the absolute return that we get, right? Total we get 511% absolute return. So this has also gone up by around 19%. So these two have beat the benchmark index. Now coming to the 1,001. 1,000 only had 3 stocks, right? Out of which one did really well, one didn't do that well, one was just a replication of the Nifty index of 11%, right? So if you look at this, this did not beat the Nifty index. It gave a return of 3.62%, which was 7% less than the Nifty index, and it has a total loss of 5 rupees. So the 1,000 small case clearly did not work, right? So 2 out of the 3 small cases worked. So the 30,000 worked really well, 5,000 also worked moderately well, and 1,000 did not work. Why did 1,000 not work? Because you're only capitalizing on 3 stocks, and it's very difficult to play with a $1,000 small case, right? It's better to just invest in the Nifty index at that point, right? The Nifty, Nippon India, whatever this is, you can just invest in the index. But this was the social experiment for 1 year. Now, there are times when if I had not done the social experiment for 1 year and if I had invested in this, what would Shashank do? That's a question you might want to ask, right? Now, when it had gone up to 60% returns, that was when I would have taken an exit. right? Now, if I was an active trader, right, when it had reached this point over here and we knew that the markets were overvalued, it had gone up quite a bit and it was not slowing down at all. So every time that happens, a correction has to happen. Now we are in a correction mode, right? We're in a consolidation mode over here. This entire bubble is in a nice consolidation mode that you see right here. But if this breaks this line, right, or if this does this, it will go down again. But if it doesn't and the war, I'm assuming the next few days should be like सब ठीक हो गया हम लोग बाय बाय बन गए वापस चलो यार कौन झगड़ा करेगा, this will again start shooting up towards a new level and new highs, right? Now this will start going up, but it won't go up in the same speed. Why? Because US is increase the interest rates, India is going to increase the interest rates as well. So same speed पे नहीं जाएगा but ऊपर जाएगा eventually, right? Because eventually the market has to go up. So don't worry about it. We have seen multiple dips, we have held through multiple dips. So when it is going up, do not take so much tension. Got it? Understood? So this was the lesson on fundamental investing for 1 year period. Okay, so I want to understand from your perspective. 1 year later, guys, after seeing this for 1 year later, do you guys feel that there is a power in long-term investing, or do you still feel that you should panic when the market goes down, or keep investing only when the market goes up and remove it and then invest back and remove it, right? Because the way I see it, we have seen multiple lows and multiple highs in this entire 1 year period. The best strategy, if I had to map out over a last period of 1 year, is to always buy the dips, right? And a lot of people say buy the dips, buy the dips, buy the dips. बहुत easy है, पैसा नहीं होता है obviously most of the time. But whenever a dip happened, right? Like for example, this dip happened, you should buy a little bit quantity here, right? Whenever this dip happened here, small dip, you can buy. It was consolidating. This was not a dip. This was a proper consolidation. Broke the consolidation channel here, just started shooting up. If this fell down, you can buy here. You should have bought here. This fell down, buy here. This fell down, buy here. Your average would have been somewhere at this range. And now it's back to this point, so you can average here again. So ideally, we've seen that in a yearly time frame, the market does what do you call that, new highs and new lows, right? So when you know that the market is going in full speed upward journey, be very careful, wait for it to slow down, because petrol khatam ho jata hai, right? After a point, wait for it to slow down, it will correct. Now we are in correction phase, which is a very beautiful phase, because this is, I also call this an accumulation phase, right? This entire region is called an accumulation phase for me. This is where I keep accumulating. The more time it is taking a halt, and before it goes back into fast track mode, I will start accumulating as much as possible. And then once that accumulation phase is done, it will start shooting up again. See, eventually, boss, I know, everyone knows, maybe not now, maybe 5 years, maybe 10 years, maybe 20 years into the future, the market is going to go up, right? And the market will go up to a very big level. So I know that, you know that, everyone knows that. So when you know that the market is going to go up, eventually, one day will reach 25,000 Nifty, right? Might not be too far away, might be in the next 2-3 years or 4 years. So when you know the market is eventually going to go up, don't worry, take a relaxed, chill pill and just keep averaging on the lower end. Cool? Awesome. Now, but also realize, I've told you this before, the Fed rates are increasing their rates, the liquidity is going to get crunched out. This would be a good time to reduce your allocation in the stock market. Don't remove it completely. Reduce your allocation in the stock market. Go towards fixed income groups, right? Try investing in some bonds. Try investing in gold, right? These fixed income returns, gold kind of investments will help you now, because the market का थोड़ा ठंडा होने वाला है. When the market starts giving again good returns, please come back. So this was the golden era of the market. Whoever made money, I mean, most of you guys would have made money in the market. Now it is going to go back into a slow growing market. So this is how the market was before, right? Before this entire coronavirus jump happened, the market was like this. It was a very gradual rise for the 3-4 years. Even if you look at 2015-16 se leke March, right? If you look at it from here, it made a high of 77% in approximately 4 to 5 years. Right, so it takes a long time to go up, right? It takes a very fast time to come down. So it's going to be a slow market again. So no worries about that. Now, what do we do about this small case, guys? Now, the ideal scenario here is, because I'm a long-term investor, I just want to stay invested for a long-term period of time. So we should stay invested and don't care about it. Buy the dips. Buy dips when you see an actual correction, not one small dips. Whenever an event happens, a trigger event happens like what's happening right now, that is when you buy the dip. But for my case and your case, because this is just a public account that I use to show you guys how the long-term investing should go on, I'm going to have closure for this, right? I need closure for this, because this is not my investing account. My investing account is something else. So because I need closure for this and I need closure for all you guys as well, we have finished our 1 year journey and I'm going to exit all these stocks, right? Why? Because I need closure. This was an experiment that was done for a period of 1 year. We saw lows, we saw highs, we saw highs up to what? We saw highs up to 60%, and now we're back to 25%. So this is me finishing this off, finishing my 1 year journey, and the main agenda behind this was not to show you the returns, not to tell you that how much money you can make. The main idea of this is me trying to teach you guys that long-term investing is the game. If you invest in fundamentally good stocks for a period of 1 year, you will keep getting good kind of returns, right? So no rebalancing. Someone saying, can you please rebalance today? No rebalancing, nothing. It is done. It is wiped out from my system. There is nothing there anymore, right? This is completely over. This is closure for all of us. Right now, I have taught you guys a lot in the last 1 year, and I know how many of you all have actually learned this, that long-term investing is the game. Fundamental analysis is the game, right? Fundamental analysis again, and I'm going to keep coming and teaching you guys how to do fundamental analysis, and I'm going to keep talking about new stocks that come into the space about fundamental analysis, right? And what's happening with the Russia-Ukraine war, let's see how this pays off. I think it's going to take another 1 week, and I think everything will be settled down, so don't worry about that. Someone saying worst day to exit. Ambrish, I know it's the worst day to exit, but today is the day of closure because I started it 1 year ago and I will end it 1 year ago. I'm not too greedy on the profit percentage. It was a good profit. It is fine. No issues. I'm not paying any tax on it. Start a new one. Not right now. What am I going to do with this money? Someone's asking. I'm going to reinvest it, boss. I'm not going to keep it like that idle in my bank account. I am going to start reinvesting that money into different other things, right? Into my core portfolio back again. Awesome. So this was the 1 year small case review experiment. Now, I'll give you something else in return. Chalo. Now, I want to ask you guys, okay? Do you want another experiment like this? And if you want another experiment like this, say for example, Shashank, we want to do another experiment for 1 year, and now the market is going to be very bad. It's not going to be a bull run. It's going to be a bearish run, right? So if you want me to do another experiment for another 1 year, starting next month, starting March, right? I will do my research for it. Then if you want me to do that, in the comments below, after this, not in the chat comments, in the comments below, tell me what budget you want me to create. Okay, give me 3 options because I created 3 here. 1,000 I'm not doing, it doesn't work, right? Give me 3 budget options, maybe 1,50,000, 25,000 or 10,000 or whatever. Give me 3 options as to what you want to do for 1 more year's journey. Now, I cannot guarantee any returns. I'm not a SEBI registered advisor. This is not an investing channel, right? I'm just going to show you what is going to happen. But basically, I'm going to sit with you on this journey for 1 year, right? So that you have that, okay, Shashank Bhaiya sitting, everything's going down, and I'm teaching and coming here, right? Returns, you might not gain any returns for the next 1 year. You might not gain returns for the next 2 years also. So no, I don't know, right? Because I don't know how the market will work. But what I can do is I can sit with you on this journey. We will do it together. Okay, so whatever this amount is there, I'll keep it here only. So if you want me to do 3 more, okay, give me 3 or 2 options, no problem. I will figure it out. Put in the comments below, whoever gives the most amount of similar answers, like the same amount of ticket size, I will make that 1 more and I will sit with you for 1 year. In fact, now the chances of getting returns are very difficult because it is a bear run. Now, I mean, not a bear run, but it's not a massive bull run. But if we beat the benchmark index again for the second time in a row, I'll be happy, right? My aim is to beat the benchmark Nifty Index after 1 year. Next March 1st, 2023, I want to beat the benchmark index. Cool? So we'll see that in the comments below, not here. I don't want the chat comments. Awesome. This is me again, Shashank Udupa, signing off. I hope you guys had a great time. Do not worry about this Russia-Ukraine war. If it becomes World War III and if it's a massive battle, then worry a lot. But it's a good opportunity for us to invest, right? I think this will die down in the next few days. Cool. This is me, Shashank Udupa, signing off.